Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Comprehensive analysis of the copper market, January 2025. Market overview and trends. Recent developments in the global copper market indicate a complex interplay of factors. Demand and pricing. Copper prices have reached one-month highs, trading around $9,153 to $9,085 per metric ton on the London Metal Exchange. Optimism about global growth and China's economic stimulus measures are significant drivers. Analysts predict that prices could trend toward $10,000 per ton by the end of the year due to supply constraints and sustained industrial demand. Macroeconomic influences. The energy transition and climate-driven demand continue to bolster copper's long-term prospects. However, near-term pressures include a stronger dollar, potential U.S. tariffs on Chinese goods, and a possible slowdown in industrial activity in China, particularly in the construction sector. Government policies and stimuli. Beijing's economic measures are expected to provide some support for global copper demand, although BMI analysts express concerns about the balance of risks leaning toward the downside under shifting U.S. policies. Global drivers and challenges. China's role. As the world's largest copper consumer, China's economic stimuli are critical. Industrial activity in the region, spurred by government initiatives, offers a positive outlook for demand. U.S. policies. The potential implementation of tariffs by the United States poses a risk to copper markets. However, stimulus-driven growth and infrastructure investments could mitigate negative impacts. Supply constraints. Limited supply from Chinese sources is pushing global markets to seek alternative suppliers, further tightening the market. Outlook. Short-term headwinds. Analysts anticipate challenges in the near term due to geopolitical and macroeconomic factors. Copper is expected to trade in a push-and-pull dynamic for much of the year. Long-term optimism. Structural demand linked to renewable energy and green technologies remains a bullish driver for copper. This trend is underpinned by global climate policies and investment in infrastructure. Key insights. Technical analysis of copper futures, January 2025. Current market snapshot. Copper futures price, COMEX, trading at approximately $4.18 per pound as of the latest session. Key levels. Resistance, $4.25 per pound. Recent highs and psychological barrier. Support, $4.10 per pound. 50-day moving average and psychological floor. Indicators and trends. Moving averages. 50-day moving average, $4.10, acting as immediate support. 200-day moving average, $3.95, indicates longer-term bullish momentum as price is well above this level. Relative Strength Index, RSI. Current RSI, 65 on the daily chart. Approaching overbought territory, indicating caution for near-term bullish continuation. Volume analysis. Recent uptick in trading volume indicates heightened interest, likely driven by optimism over Chinese demand and green energy-related initiatives. Chart patterns. Ascending triangle formation. Copper futures are forming an ascending triangle with higher lows since late December 2024, suggesting a potential bullish breakout if resistance at $4.25 is breached. Trendlines. The upward-sloping trend line from the November lows near $3.85 remains intact, further affirming the bullish bias. Fibonacci retracement levels. 38.2% level, $4.12, serving as a critical short-term support. 61.8% level, $4.30, could act as the next major resistance in case of a breakout above $4.25. Key insights for traders. Bullish scenario. A breakout above $4.25 with sustained volume could push copper futures toward the next resistance at $4.35 to $4.40. Structural support from green energy projects and China's reopening adds to the bullish case. Bearish scenario. Failure to hold $4.10 could see prices retesting the $4 level, psychological support, or even $3.95, 200-day moving average. Macroeconomic risks, such as potential U.S.-China tariff disputes, remain bearish triggers. Neutral play. Range-bound trading between $4.10 and $4.25 may dominate until clearer catalysts emerge, providing opportunities for short-term range strategies. Comparative strengths. Copper remains more vulnerable to macroeconomic pressures than aluminum, which enjoys a relatively insulated demand profile. Based on the latest analysis, the copper market presents a mixed outlook. Short-term volatility is influenced by geopolitical risks and macroeconomic conditions, while the long-term trajectory is supported by structural demand from green energy initiatives. For further insights into the market or to analyze related equities, please consult industry-specific reports or visit commodity trading platforms. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.